consciousness, and we'd love to interview you.
Yes, I heard it. I got Teresa
I
sent me
already
a
asked
text.
him last night.
Let's
Oh,
do
cool.
it. Let's do it.
Yeah.
So you guys are going to start a YouTube channel, right?
Yeah.
Awesome.
But we're going to focus, because nobody's focusing on how do you deal with the emotions after, Bloody Monday or flash crashes, and people can get depressed, and people actually commit suicide when they lose money in what do you call it? Stock market crashes. So we don't want that happening. We want people being really robust and, Buddha-like.
Yeah. Okay, guys. So let's start with the presentation. Yeah, let's do the interview. Yeah, we can schedule that later. When the interview is done and you guys posted it, I will shout it out on my channel as well, so you can get the first audience. So that is nice.
Thank you.
I'm going to start sharing my screen. I prepared a presentation for today again. There was the last one. So let's start with that. So guys, welcome to the second bootcamp meeting today. I hope you all had a nice week. It was quite an interesting week in the markets. I have to say some things were happening. We are going to have a look at that later in the presentation and when we talk. And on today's program, we are going to have a look at a portfolio allocation. What kind of a portfolio do you want? What could be a healthy portfolio? We are going to have a look at types of trading and which risks come along with that certain types of trading. We are going to have a look at different markets, bull and bear markets, when to trade altcoins, when to use leverage, and so on. We are going to have a talk about the funding fees, and we are going to have a chat about the relative strength index in that as well. Let me wait. I need to. Where's my mouse? I need to admit people to the room. Yes. Okay. So first of all, let's have a look at the portfolio allocation, because I think that is just one of the basic things you need to think of. Sorry guys, I need to admit right here, but my mouse is not visible. Wait.
Jeroen, if you make Nicola or I the co-host, then we can help with some of this admin in the back while you keep going with your presentation.
I'm looking, because I don't have the option with you guys to make you co-host. I can make you an host. Maybe that works, or does that disrupt?
Then you wouldn't be able to share your screen. So.
Oh yeah, true. Okay.
Does it let you disable the waiting room if you go into your
Oh yeah, in my Zoom settings,
so
right?
go next to your. Yeah, if you go into your advanced settings, either from your little microphone or video settings, I think once you're in, you can disable the waiting room, because you also have a passcode on this meeting, so
you should
be able to just turn it off completely.
Okay. Okay, we have 7 people right now. Let me just continue with the presentation and.
Can I ask a quick question? Are you going to change the link every time we meet? Because I was using the old link.
It should be the same link. It's the same meeting.
It wasn't the same link, because I copied it from week to week and I used it, and then I used this one, which is different, that you just sent it.
Okay, because I just copied from the same meeting from last time. Like I copied it in my Zoom account. I copied the invitation from the last meeting.
Okay, so this is the one we're going to use.
Yes.
Okay, all right. I just want to make sure, because I'm very organized that way, and I was like, "What's going on?"
Okay. So, yeah, apologies for that. I just thought it was the same. It's the same link.
Yeah, no worries. I'll be prepared next time.
Okay, let's go back to the presentation.
Okay, thanks.
So first of all, a healthy portfolio allocation is important, because it also helps you to keep an overview of your assets, but it also helps you in the emotional matter. That you have a good perspective on what kind of risk you are taking, and where you want to go into the future. And I think in essence, the majority of your portfolio should be in Bitcoin. Of course, this really depends on how you want to divide your portfolio, but I think the majority should definitely be in Bitcoin, and that is due to the following reasons. First of all, you want to be part of the monetary revolution that we are in right now. So next to trading, sorry guys, next to trading, you want to okay, so we have one more. Next to trading, you want to make sure, like I said last time as well, that you are inside the boat that, right now is going into the direction into a uptrend, right? Just like electronic cars will be something of the future. That is a trend that we can spot right now, already spot over the past decade or the past 5 years. That is just something that most likely we will see an increase from in the future. And that's the same as what we are seeing with Bitcoin. So I think the majority of your portfolio should definitely be in Bitcoin. And also the upside potential of Bitcoin is also kind of unlimited if you look at the potential. And it is like I said, good for controlling your emotions, because if you, for example, lose a trade, then it can you can feel bad. But if you have your bigger bag, you are inside Bitcoin, you will feel less emotional attached when you are losing a smaller trade, which is just a fraction of your portfolio. Then when we have a look at altcoins, and this is something I think is very important to realize, is that there is a high risk when you are investing and trading altcoins. Trading, it depends in which kind of time frames you are trading altcoins. But if you are investing in altcoins, especially for the longer term time frame, then there is a high risk, because normally altcoins, they only perform well in a specific type of market, which is a speculative market, a bull market, and they don't thrive in a bear market or when there is not so much confidence in the markets. So that is something, something to realize. I always compare it with the internet. So if we have a look at the internet in 1990, then the internet itself is the infrastructure that has been created, a new communication protocol. And all the internet companies which are built on top of that protocol, those are the altcoins. So companies like when the internet just came in 1990, there were like a lot of companies growing out of the ground on top of the internet, and most of them actually failed. A lot of good ideas. There were a lot of good ideas with good CEOs as well, who put a lot of work and effort into their projects, but a lot of them failed. And that is as well what we are seeing with altcoins. Like Bitcoin is the infrastructure right now, is the protocol that we are using, a new protocol of storing value. That is the revolution. That is the and the altcoins that are companies that are built on top of that protocol, although they don't use the Bitcoin blockchain. So that I think that is how the situation is. So depending on your risk, you will have to divide your portfolio into Bitcoins and altcoins. Also, especially depending on a certain period, because in certain periods altcoins thrive, and then there's also, of course, a lot of money to be made. And a healthy portfolio, and this would be like the really neutral general portfolio for the average Joe, I would say, who wants to be into crypto, would be of your crypto portfolio, 60% in Bitcoin, 20% in altcoins, and 20% in stable coins. So sometimes a lot of people, they also do like 80% Bitcoin, 20% in altcoins. If you want to be fully invested into crypto, I think it is good to always have some stable coins on the side. If you because if opportunities arise, like something we have seen in March 2020, then you also want to be able to take advantage of something like that when we are seeing a huge drop, because you can never be 100% sure what is going to happen in the future. So therefore, I would always advise to have as well a percentage in stable coins. Doesn't have to be 20%, although I think it is a healthy amount. And these percentages can also change, of course. So the higher the price of Bitcoin goes, maybe the lower the allocation of Bitcoin is going to be in your portfolio, and the higher the allocation of, for example, stable coins, with the incentive to buy Bitcoin back at a later stage for a cheaper price.
Jeroen, can you comment a little bit on how you choose what stable coins you want to be in, or is that coming up?
Yeah, that is a good question. The reason why I put in brackets here USDC is because USDC is a stable coin from Coinbase, and this one is quite legit if you have a look at Coinbase as a company, right? Coinbase have all the papers, right? They are a registered company. They have a transparency in what they are doing. And if you have a look at, for example, US dollar Tether, then the US dollar Tether in circulation, there are a lot of questions being raised with that company, the stablecoin US dollar Tether. So just to protect yourself from a future catastrophic event with US dollar Tether, I would suggest personally to have your stablecoins allocation in USDC. I'm actually always using USDC. But if you don't want to put your eggs in that one basket either with stablecoins, you can also diversify in stablecoins. So you could do, for example, from that 20% stablecoins, you could do a part in US dollar Tether, a part in Binance USD, and a part in USDC. That is maybe even a more safer strategy, because 20% in USDC is, of course, your eggs in one basket of a stablecoin. However, I think, for my personal opinion, I have the biggest trust in USDC. So I'm most of the time, when I'm trading Bitcoin to stablecoins, I'm most of the time using USDC. I wouldn't have 100% of my stablecoins in US dollar Tether, because there are a lot of questions being raised at Tether. They have a lot of lawsuits as well, and they are also not that transparent about how many real US dollars they actually have on their bank account and so on. So that is something something worrying. So that's why I personally go for US dollar, USDC.
Jeroen, can I ask another question about that?
Yes, sure.
So when our trading portfolio is a smaller percentage of a much bigger investment portfolio, like my trading portfolio is probably 7% of my total investment portfolio, and my investment portfolio is all based in fiat currencies, like it's all stocks, etc., that are tied to the fiat system, right? So I am wondering, in a case like that, should I still be having the 20% stable coin when so much of what I own is tied to the fiat system?
Yeah, that is a good question. That is actually a good question, because the answer can be yes or no. That's as well depending on your risk, because it's nice to have some stable coins to take advantage of opportunities, right? If you see Bitcoin dipping, you could use that. You could use those stable coins to enter the market. If you don't possess any stable coins, right, and you have like 80% Bitcoin, 20% alt, Bitcoin is dropping, then you can take something from your other portfolio to use that to accumulate more Bitcoin, because you see a opportunity. If you have that space as an investor, then that is good. Then you could also do something like that, of course.
Okay, thank you. I appreciate that.
So no, but it's a good question, because like this is the portfolio allocation is very personal. Like myself, like I almost have all of the time, most of my money is in crypto. I always make sure I have like money on the bank for like the coming year. I have enough money for the coming year, and the rest of it, most of the I always have actually in crypto. That is a high risk. I know that. But that is that is also the risk I'm willing to take for the opportunity that we are seeing right now. And I also understand that not everybody wants to take that risk. So depending on your risk, you should divide your portfolio. But like I said, like for the average Joe, a neutral way of your crypto portfolio diversification, I would say healthy would be 60% Bitcoin, 20% altcoins, 20% stable coins, and that 60-20% stable and alts and Bitcoin, they can differ from time to time, depending whether we're seeing a altcoin season. Because if you have 20% in altcoins and the altcoins blow up, then the 20% might become 40%, right? So then you can take some profits till the altcoins is back to 20%. So that is how you can manage your bigger portfolio. But yeah, I think the most important thing from here is that the majority should be in Bitcoin. Like today, I was laying at I was laying at some pool right here over in Bali, and I heard a lot of people right here in my environment. They talk about crypto. I don't know them, but they just have a conversation with each other, and I catch something up. They talk about crypto, and today somebody said like, yeah, I'm looking to invest in new cryptocurrencies with a low market cap to make 100x return on my investment, because with Polkadot it's not possible anymore. And that is not really how it works, because if you approach the markets like this, then in the longer term time frame you will lose your investment, because if you would invest in a low market cap coins, then you carry a high risk, and the majority of these low market cap altcoins, also the little bit bigger market cap altcoins, the majority most likely will disappear. I don't know who from you have seen 2016, 2017, but there were a lot of companies back then, a lot of ICOs who just right now are all forgotten. You know, there were like hundreds of projects which were very promising, and people from very respected companies were working there or were advisors and so on. And in a bull market, it is possible to make money with that, but in the longer term time frame, there's a high risk, and most of them will actually go to zero and will disappear. And then if we have a look at your altcoin portfolio, or at the altcoin portfolio, then I think of the altcoins invested, the majority should be in Ethereum. And this is the same reason why Bitcoin has a more secure future, and that is the network effect. The infrastructure of Bitcoin is out there. Almost every company is using every crypto company is using the Bitcoin network. Same is going on with Ethereum. Ethereum is the biggest altcoin, and a lot of liquidity depends on Ethereum as well. So a lot of stable coins like US dollar Tether, they are built on the Ethereum blockchain. So Ethereum is not a altcoin which will disappear in the near future. That is definitely what I think. So I think if from the altcoins that you're holding, from the 20% altcoins of a healthy, neutral crypto portfolio, I think the majority should be in Ethereum, because with these, with Bitcoin and Ethereum, you have the highest security of a good risk to reward. So a nice reward for the risk that you're taking in the crypto world.
I have a quick question on this. So
yes.
I right now currently actually have I have a little bit more in Ethereum than I do Bitcoin, and I moved some over there because my Ethereum, since I got in at the end of November, Ethereum has outperformed Bitcoin by about 35% for me. Like, what are your thoughts on that? Because their charts are also very, very much aligned. Like, do you see Ethereum kind of moving into that position to share that role with Bitcoin, or do you think that it's still do you see the future being a little bit more unstable?
Well, first of all, I can understand that you trade Bitcoin for Ethereum, that I can understand, because Ethereum is in periods outperforming Bitcoin. So that is really true. But if you think about the future of crypto, then Ethereum, in my opinion, will never have a same place as Bitcoin. And the main reason I don't know if you guys read this book, The Bitcoin Standard. Maybe some of you read that, but if you read this book, which is a really good book, I would definitely recommend you reading this book. Then I think you will understand why Bitcoin is not replaceable. Because if Bitcoin would be replaceable by a better project, which could be a easier transaction or quicker transactions and so on, a lot of people saying these reasons, then then the point of being a store of value is going away, because then that new project can be replaced as well, and that project can be replaced as well. That is so that's the thing. So if Bitcoin could be replaced, then it doesn't have any value anymore. Then the other project could replace it also doesn't have any value. So so I don't think Ethereum will share the role of Bitcoin, definitely not. But I think Ethereum could provide a function for markets where Bitcoin is not performing so well. So
is not. Yeah. That's kind of where I see it, is that it's like it's sort of like the silver and gold analogy, right? Like, I don't think it'll replace Bitcoin, but I think that there is also so much that is being built off of the Ethereum chain that I was just curious on your thoughts. But okay, thank you.
Sure. But yeah, I'm definitely do share it. Like, sometimes it's nice to take risks if you like trade Ethereum, trade Bitcoin for Ethereum. Like right now, I also have a big Ethereum holding because I'm expecting Ethereum to outperform Bitcoin in the next months. So right now my portfolio is also more divided in Ethereum, so, but I do that with the intention to earn more Bitcoin. That is the thing, because you also, I don't know, like from everybody who when you guys stepped into crypto, but there comes a moment in this bull market where we are in right now, there comes a moment where everything will change, and we will enter a bear market, and there will be a very bloody market where a lot of projects will like lose 80, 85 maybe % of their value, and then Bitcoin is going to be the safest bet. If you then like in altcoins or Ethereum, then yeah, it will be quite bloody, I would say. So that's why I say, like, altcoins are nice to trade, but only in certain periods. So in the longer term time frame, you have to be very careful with altcoins. Like, it's not when you see a altcoin project, I wouldn't personally think like, okay, I will invest in this project for the coming 2 years. I'm not. I don't think that that is worth the risk.
Yeah. Whitney has her hand up for a question too, and then
yes,
if you don't mind, I'd like to ask another question.
Of course.
Thank you.
Of course.
So, Sharon, this was actually about what you were talking about a little earlier. I have some cash in an exchange, US dollars, that I'm waiting to invest in something, and I'm just wondering, is there any advantage to putting that into, say, USDC, or, I mean, at this point?
No. The thing is, if you have it in USDC, you can quickly transfer that right to Ethereum or like to any cryptocurrency, Bitcoin. If you have to do a wire transfer when Bitcoin dips, it takes maybe 1-2 days before your money arrives at the exchange. So that could be the disadvantage. But further, I think, So if you're really planning to invest it inside the markets into crypto, you might want to consider to have it in as stable coins on an exchange. But I think a wire transfer should be good as well.
Oh, okay. Thank you.
Sorry to interrupt, but you can actually keep your dollar or euro, whatever currency you have in the exchange. You don't have to convert it to a stable coin, because I have the same situation with euro. And when I first started, I was just keeping it in euro and then converting to USDT to purchase whatever I was supposed to do. But at least in Binance, that's possible.
Sure, but then when you have it in, okay, sure.
You just have to buy on the spot.
Yeah, that's what I was thinking. I just wanted to make sure that I wasn't missing something.
Okay. Yeah, depending on the exchange, which functions. I most of the time use. Right now, I just use stable coins, but yes, Binance or Coinbase is also offering to hold your cash on the exchange. So.
Okay, great, thank you.
Perfect. Jeroen, just so you know, on Zoom, if people use the raise hand function like Whitney and I are, they always pop to the upper left of your screen, so you can see who has their hand up.
Yeah, I see it. I now see the hands.
Yeah. And you can tell the order in terms of the one furthest to the left is the most recent to raise their hand. The raised hand function is under the reactions tab on the thing if anybody wants to raise their hand to ask a question, and then you just lower your hand once you ask your question. That'll just make it easier for Jeroen, so he can see his questions.
Okay.
I know.
If I don't call you guys, make sure to just yeah, put on your mic and just speak out.
Okay, perfect. So here's my question, Jeroen.
Yeah.
So if you create this kind of a percentage allocation, like which I love, this is like a balancing strategy, right?
Yeah.
So it forces you, if one of them goes crazy, it forces you to take money out of that and put it in the other, which means you're always selling high and buying low. My question is this: do you have a strategy for when you decide to rebalance your allocations? Because if Ethereum's going crazy,
Yeah.
your alts are going to be way higher than 20% and your BTC might drop to 55%. When do you choose to rebalance?
So that depends on the chart. So with Ethereum, right now it depends on how Ethereum is going to perform. But I will plan to Ethereum to take out. But it's a good question, because it is actually depending both. First of all, for example, Ethereum, right? Ethereum has a cycle where it's outperforming Bitcoin. You want to try take it out at the top. Now, most of the time, the exact top is difficult to predict, right? So you take it out like level for level once Ethereum is increasing, or once we're breaking down some support. Other altcoins are following afterwards, after Ethereum. So normally we have a run in Bitcoin. Afterwards, Ethereum is the star in the scene, and then after Ethereum, other altcoins follow. That's how it normally goes. Not every cycle goes like that, but normally it's going like that. So I would first take profits in Ethereum and later take profits in my Chainlink or Polkadot, whichever altcoins I hold. So yeah, when to take profits, it's depending on the altcoin and where it is in the chart. But it is a good question, and yeah. If you have this, you have 20% alts, and suddenly you see like, oh, I have 40%, 45% of my portfolio's altcoins, then that's definitely a moment you want to reconsider. Okay, let's take some off the table. Let's take quite some off the table and just secure it in Bitcoin, because I think for most traders, it is the goal is to accumulate as much Bitcoin as possible. The altcoins are just
so you're basically
temporary.
not choosing finite points in time, but you're rather looking at the individual cycles of the coin. And if your altcoin portfolio is significantly higher than your BTC allocation than you want it to be, then instead of just settling out your trades, you're actually moving some of it back over to BTC.
Yeah.
When you're looking for these opportunities. Okay, thank you. That helps.
Awesome. So we go to the next thing, and that's the types of traders, types of trades. And we are going to have a look at the following, which is a swing trader, scalper, a pattern trader, and a hedge trader. I'm going to explain what these trading strategies are and what kind of risks are involved, and also a little bit like what kind of things you have to think of when you are doing these different types of trading. And let me first we go to the swing trades. So a swing trader is somebody who's trading in a multi-day, multi-week, or multi-month. So it's trading the bigger cycles. HTF right here stands for higher time frame. LTF stands for lower time frame. So then that you guys know the longer version from this, because we're going to use this more. Swing trading is, for example, right here in the chart, you can see Ethereum in the Bitcoin comparative, and this is the daily chart. So you can see in May, we retested the lows right there, the first green circle. That could be an entry point, for example. And then you can see May, July, September. September would be the moment to take out Ethereum in the Bitcoin comparative. So to switch your Ethereum back to Bitcoin. But as you can see, that is a multi-month period, right? So that is what swing trading is. You check for opportunities for the longer term swings. It doesn't have to be multi-month. It can be multi-day, multi-week as well. In this example, it's a multi-month, and it's trading on the higher time frames. And the good thing of swing trading is that it carries less risk. It is trading with the least, I think one of the least amount of risks. And so that is interesting. And I always say, like, if you make a couple of good swing trades each year, you can already have quite a hell of a return of investment. So I think that this is one of the more important ways to trade, is really to take the biggest swings and try to get more Bitcoin, swing trading altcoins, for example. The good thing as well is you can't lose your position if you don't trade with margin. So if you, for example, like I exchange 1 Bitcoin for 33 Ethereum, then doesn't matter where the price of Ethereum goes, I wouldn't lose that Ethereum. I would always have that 33 Ethereum. I don't have a liquidation price and so on. So that is also another advantage. You have less risk, and you also have more space. So when Ethereum drops, you can monitor the chart, and then you can also say more easily, I'm going to wait longer and wait till it's at a level where I want to sell. You cannot do that when you are trading with leverage, for example. You're more closed, or you're more sticked with time. And swing trading also is more involved with bigger orders. So different types of trading strategies also carries different forms of liquidity in your order. So when I'm doing swing trades, I'm using more money, bigger orders, because I'm not using any leverage. So I would use a bigger part of my portfolio to do it for swing trading to get a better return.
Ask a question, Sharon?
Yes.
As a swing trader, if you're not using margin, because I've just done about 4 trades on Femex and 4 or 5 trades on Bybit. What I'm noticing is, and I didn't realize this when I placed the trades, is that there's a daily fee.
Yes.
So as a swing trader, you don't risk having that fee either, because you're not using margin. And right now, I feel like the fee is kind of eating into the potential profits because of these smaller positions that I'm trading right now, at least to practice.
Yeah, so that is a good point, really good point. And I have a slide of that later in the presentation. There are different fees with also different types of trading. And one what you're talking about is the funding fee. So every 8 hours you have to pay a certain amount, and sometimes that can be eating your orders. Exactly. And that is also something you don't have with swing trading. You just pay the one-time amount when you switch your trade just on the spot market. So I think swing trading is, for me, it's one of the more important ways of trading, and definitely a way of trading to get a very nice return on investment. Like this trade in Ethereum you see right here is a 80% trade. Well, if you can make an 80% in a couple of months with the majority of your portfolio, or like with a huge chop of your portfolio, then I would be a happy trader, to be honest.
Yeah, I mean, I'm more drawn to swing trading, but I'm trying out this on Bybit and Femex, but I don't know if I really, with all the fees and everything.
Sure.
Okay, I'll wait to see your slide.
Good. So then we have the scalper, and a scalper is somebody who is trading intraday, so opening and closing a trade at the same day. And I have example right here. We have like a support in the chart and a resistance, where a scalper would like long at the support and like close the trade at the resistance. A scalper most of the time use leverage, so it's trading on Femex or Bybit. And he cares about the funding fee, of course, but normally, like when you're scalping, you are exiting your trade within the next couple of hours. So you're opening a trade a couple of hours later, especially the same day you're closing the trade. And most of the time, scalpers, they trade with leverage, otherwise it's not really profitable. You really want to use leverage with that. And the targets of scalpers are based on support, resistance, or Fibonacci levels most of the time. The thing with this trading strategy, scalping, is that it's very time consuming. So you have to be really a lot in the charts. The good thing is you have instant profits, so you can make money every day. That's the good thing. Another thing is that it's quite emotional, and it's like it is time consuming. It is also emotional, difficult to control, because you are in front of the charts, a lot of stuff, there's a lot of action, so it's easy to lose track of your initial trading plan, let's call it like that. And scalping carries a high risk, I think, because you are trading with leverage and you can always be wicked out. So you have to deal with the wicks in the price, which is often quite confusing, and can as well be a risk with a being liquidated, for example, or a wick that is hitting your stop loss and then still is going into the direction which you actually want. You don't have too much space with that when you are a scalper. But yeah, the advantage is that you have instant profits, so you can make money every day in the markets. Then we have pattern trading. Pattern trading is very interesting, and it carries a lower risk on the higher time frames. A pattern on a 4-hour time frame or on a daily time frame has a lower risk than, for example, on the 5-minute time frame. If you go into the 1 minute, 5-minute time frame, then you will find a lot of patterns which won't play out. And so that is something to think about. Like the higher the time frame, the lower the risk of the pattern. Then the nice thing about patterns is that often it has a clear structure, but you do have to realize that patterns are a subjective thing. So not everybody is seeing the same pattern. Every trader is seeing a different pattern. So that's why you cannot always be sure that a certain pattern is playing out. It's not a certainty. It's just it's a calculated risk based on probabilities, of course, but it is as well subjective. So that is something you need to realize. Then the entry and exit is often very clear. That is nice. You have the entry at the breakout or at the retest, the exit at the target of the pattern. But on the other hand, this is an advantage, but also a disadvantage, because these rules can also work against you. So you can see a pattern, for example, the pattern is breaking out, but in between we are already hitting a extreme resistance level where the price is not reaching the target of the pattern. Another thing, what we often see, that is also something I mentioned in the course, is that often patterns don't hit the exact target. They already reverse below the actual target, because the exact target is a level which a lot of traders are watching. So a lot of traders are taking profits slightly below the actual target, which means that often patterns, they come slightly below the target and then they reverse. So it is always better to have your actual target below the official target of that certain pattern. Then we have the hedge trader.
Jeroen, sorry, can you repeat what you just said about the target above the official? Can you just repeat that? Because that's gold.
Okay. So like normally, let's say you have a triangle formation, right? The target of the triangle formation to the upside would be 58,000. I'm just saying a random number. Yeah, 58,000. Then everybody who's trading that pattern is looking at 58,000. Me as a trader, I want to be sure that I'm getting out with profits. So what am I doing? I'm setting my target below 58,000. So we're seeing quite often that the pattern, when we see the breakout, the price reverses before 58,000, because a lot of traders, they want to secure profits, so they set their target slightly below that. So I would always recommend you to set your target below the official target of a certain pattern. Never at the exact target. Then we have the hedge trader. This is something I do quite often because I'm overly exposed in Bitcoin. I have like the majority of my capital is in Bitcoin, and I want to protect myself from catastrophic events now and then. This is something which can happen now and then, especially with Bitcoin. And sometimes when we are seeing a clear pattern in the price of Bitcoin, or a clear support, where I can be quite sure of that when Bitcoin breaks that support, we will see a further drop to the downside. And that is a moment for me that most likely I open a leverage short position. And I do that to in order for, if Bitcoin decreases, then I try to gain on that decrease in the Bitcoin comparative, and that gain is adding to my US dollar comparative. So I'm not losing I'm not losing in my portfolio in US dollar comparative. I'm not trying to trade every dip of Bitcoin. I'm not shorting every dip of Bitcoin. Definitely not. That is not a good plan, especially not in a bull market. But I do, when Bitcoin is breaking a key support level, I do now and then open a leverage short position. You know, leverage of 7 to 8, 7 to 9x. And so I'm risking a small fraction of my portfolio, because if the price reverses and go back up, I get stopped out, I have a slight loss. But if we see a catastrophic event like we are seeing in 2020, like the March to 20 crash, then you can slightly prepare for something like that. So yeah, that is the hedge trader who wants to hedge their bigger portfolio for such an event. Because the thing is, what I'm thinking of normally, you have to know thyself. They say you have to know yourself. That is very important in trading. And if you see Bitcoin dropping like in such a catastrophic event, that can also do something with you emotionally. Maybe you want to take some Bitcoin off the table at a wrong moment. You know, that is possible. And if you risk a small part of your Bitcoin to, for example, short the moment we break support, then you gain from that move. So you don't feel the urge, you don't have a negative emotions coming along with such a dip in the Bitcoin price. And that is something that works for me. Like so it may not be working for everybody, but yeah, therefore it is important that you that you also know yourself, in the sense of that you know what are your weaknesses, when is the time that you're feeling the worst, and how can you prepare for that. Do you want to take some risks to prepare for that? And yeah, so that is hedge trading. And so these trading types, these are the different trading types, and you can do multiple at the same time. So it's not like, okay, he's a swing trader or he's an intraday trader. No, I think as a trader, you should like take advantage of opportunities in the markets. Doesn't matter where they come. So if there's an opportunity, when you see a nice uprising channel, long at the support, short at the resistance, something like that, which is intraday, or when you see a opportunity of a nice swing trade in Ethereum. I think as a trader, you should be, you can do multiple at the same time. Depending on the market opportunities, you should separate them clearly. So that you know, like, okay, right now I'm trading intraday. Right now, this trade is going to be for this trade is going to be for that. And don't mix it up too much. Don't use the reasoning you use for trade A, for trade B, for trade B. It's getting a spider web, very complicated. I think it's good to, yes, separate clearly what kind of trades you are taking. I also wouldn't take too much trades at the same time. That is something I think about right now. I think it's also good, again, depending on you as a person. But for me, it's always good to keep things simple. Then you have to recognize the risk, of course, and recognize the different emotional states and the time that it consumes as well. That's also important. Like, if you want to take it easy, if you want to have a peace of mind, you want to sleep at night, then it is not recommended that you're going to sleep at night with a leverage trade open of 10, 20x. Like, maybe it works for you, but for me, unless I'm very confident about a certain trade, sometimes I do it. I leave it open overnight, but most of the time I try to close it. That's not always of not taking profit at the right moment, but it's always also a state peace of mind you want to have, you know. So that is something to think about as well, the time that it consumes. Scalping consumes a lot of time. For example, swing trading in that way consumes less time. What's that? Then then the risk measured, of course, that is something you have to think about as well. Should I take more risk? Should I take less risk? Right now, I make an example of the pattern we have seen. We have seen actually yesterday, over the past couple of days, we had the inverse head and shoulders. We had a clear neckline. Bitcoin broke out to the upside, retested neckline as support, which is a long signal wide. Normally, you should have your stop loss below the neckline. But as you can see right here, the price came below the neckline, bounced off, and eventually hit the target of the inverse head and shoulders pattern. So that is something you want to ask yourself as well. Do I use a high leverage and do I put the stop loss right below the neckline? You know, which is actually taking more risk. Of course, the reward eventually is also higher. But you could also say, like, and this is what I think is more important, is it works better for me in my experience. I take a lower leverage and I set the stop loss more loose. I have more space for the stop loss, and I'm not really getting wicked out in a trade. Often I'm behind the chart as well, and I'm using a certain confirmation for my stop loss. So it's not like that the price is hitting a level, I'm stopped out of my trade. But I would say, for example, like, okay, I want to have a 4 hour, like maybe a 1 or 4 hourly close below the neckline, could be a example. Or I want to break the uptrending support in the momentum indicators. If we break that, I know the momentum will be to the downside, so that could be a moment that that will be my stop loss. And of course, you cannot set that in the exchange, so therefore you have to be in front of the charts now and then. So depending on the situation, you need to think about the amount of risk you want to take, and in how far that can and how far you can lower the possibility of being wicked out in, for example, what we are seeing right here with the inverse head and shoulders pattern. Then we have different markets, and we have bull and bear markets. And yeah, of course, everybody knows bull market prices go up, bear market prices go down. But I think, different strategies can also be applied in these markets. So I think bull markets, there goes a saying, bull markets are for altcoins, bear markets are for trading with leverage. And I think bull markets are really good for altcoins because there is a lot of speculation in a bull market. Right now, we are seeing it as well. A lot of altcoins are outperforming Bitcoin. And I think right now here are laying the bigger opportunities to trade maybe in the top 50 market cap altcoins, to trade these altcoins for more Bitcoin. I think that can be, definitely in such a bull market, in certain periods, it can be more profitable than, for example, trading with leverage. Then a bear market, like in a bear market, you don't want to take extra risk, especially not in altcoins, because altcoins in a bear market, they perform the worst. Most of them, they die out. A lot of them, they go almost to zero. They just like disappear from the markets. So if we enter a bear market, if we enter a bear market, then you should definitely be out of your altcoin position, because this is carrying a high risk in a bear market. So this is something something important, that different markets, they bring as well different opportunities. I think bull markets are for altcoins, of course, also for leverage trading, depending on the opportunity that is providing. But in bear markets, you have to be very careful. And in bear markets, I think it's just good to trade carefully with leverage. Then we come to the funding and fees, because I understand sometimes there's some unclarity from here. And well, first of all, we have a limit and market order. Limit order is an order executed at a certain price. Market order is executed directly at the best available price. And there are different orders. With a limit order, you are a market maker. You're providing liquidity to the order book. And with a market order, you are taking liquidity out of the order book. And when you take liquidity out of the order book, they see that as something you have to pay extra for. So if you are like, if you add liquidity, you get like a reward. or you have lower fees. So there is a incentive to providing liquidity to the order book, and there is a there is a fee for taking liquidity out of the order book. And this depends on the exchange a little bit, but on Binance, right here you have a make and take a fee. I think make and take on Binance, it might be even same, but it also depends if you're trading with leverage. But right here we have I think on Binance the maker fee, if you are providing liquidity, is 0.1, and if you are taking is 0.6. And if you have a look at 0.01 and 0.06, and if you have a look at Bybit, that is below it, when we have the when you have the leverage trading, there also carries different amount of fees. You have the maker's fee, where you actually get a piece of your where you actually get rewarded for providing liquidity, and you have to take a fee where you have to pay for for taking liquidity. And these are actually quite high, especially when you are using leverage. They can add up. Then next to these fees for just executing the order, we have a funding rate as well. And the funding rate, they built that to create an incentive for a more balanced ratio between longs and shorts. So when you have like 90% longs and just a couple of percentage shorts, then the longs are going to pay every hours to the shorts, and the other way around. So they create an incentive to have it a little bit more balanced. And this funding rate is a dynamic number, so will change every 8 hours, and can also be sometimes be quite high when the majority of people are long and you are in a long position. Then you can actually pay quite some fees and fundings every 8 hours. So yeah, this is something to take in mind. When I'm usually trading with leverage, I don't have those trades open for very much longer than one single day. It's exceptional for me to have a leverage trade open for multiple days in a row. But yeah, exchanges may differ in may have different rules for this. So sometimes you use a referral link, or you use the own token of Binance, you get a discount on the fees, you know. So but approximately it is these numbers. But that's the difference. So you have like the fee of executing the order, and then if you trade spot market, then that's all you have, just the fee for executing the order. But if you're trading with leverage, then you also have the funding rate, which is a recurring fee every 8 hours with a dynamic number, which changes depending on the ratio longs and shorts.
Jeroen, is there a rule of thumb as to how much the fees are taking out of your trade every 6 hours? Like, let's say you're in a limit order. Is there you can expect it to be X%, or is that percentage changing so much because they're recalculating based on the balance that you never really know what the fees are?
So wait, you mean if you execute the limit order or the funding rate?
Well, like, for example, my understanding, so I could be wrong here, but my understanding of the limit market order thing is it's a calculation that varies depending on how many limit versus market orders there are.
No,
right?
no, that is the funding rate.
Oh, the funding rate is what varies.
The
Okay.
limit market order is a fixed percentage depending on the exchange. So Binance has it slightly higher than Coinbase, for example, you know.
Okay.
And the funding rate, this one is dynamic. So this is changing every 8 hours depending on how many people are long and how many people are short.
Okay, so is there like a rule of thumb where we could expect every 6 hours, X% of your trade is coming out into fees in general? Like, just so we can calculate it in our head, is it worth it to keep this trade open across when the funding fees are going to do? Like, is there any kind of rule of thumb there? Because I'm often up against this where I have it marked on my calendar, right? Funding fees come out in 30 minutes. And I'm sitting with the trade open and I'm trying to decide is the additional, 200 pips I might get out of this trade because it's almost at his target worth it? Or should I just take the limit now, take the money and run? Because the funding fees are about to come out. And I'm just wondering if there's any kind of way to make that decision. Do you get what I'm saying?
There is, yeah. So like the general rule of thumb, when there is a balance between long and shorts, then you pay approximately every 8 hours 0.01%, and every day 0.03%. So this is like when there is a balance between long and shorts. And then when there is a imbalance, then it is changing. So when then a lot of people are going long and you have like low shorters, then that could increase to, for example, 0.04% per 8 hour, or can even be crazy to 0.3%. I have seen quite high funding rates in the past. So that is that is definitely something to take in mind. What is funny with the funding rate is that it is as well a great indicator of where the price might go in the shorter term time frame. So when you have like a very high funding rate, which means that the majority of the people are long, then most of the time that is followed by a price drop, because there is a shakeout of all the longs. We can go more into depth into the funding rate as an indicator as well. I have a video about that in my trading course as well. It is actually quite accurate when we have a extreme reading of the funding rate to the upside or to the downside. Most of the time indicates a short-term reversal in the price. And it makes sense, because if you have the majority of the people are long, then at one moment there are no buyers left. So the price needs to shake out in order to continue to grow.
Sharon?
Yes.
Question about the some of these exchanges, like for example, Phoenix has their premium membership where they say there are no fees. Does that mean there are no fees, period, or no certain fees?
So yes, that's a good question. So Femex has this premium account, which I think is actually quite awesome. They have 0 fees on the spot market. So when you are trading with leverage, you still pay fees. So this is their biggest market. They make it the biggest gain is the market taker fees. Sorry. And the premium account is for spot trading on the Femex platform. But they changed it right now. When you are a premium member, you get like 4 coins. I think 4, like Bitcoin, Ethereum, and 2 others. I think you can trade with 0 fees. And then you have some different altcoins they've added where you pay like a slight fee. So it's not every single contract they have 0 fees. I've seen that lately. So, but I think Bitcoin and Ethereum for sure, and 2 other altcoins you have 0 fees trading, which is nice.
Thank you.
I think.
Good to know. Thanks.
Then we go to the relative strength index. We got an awesome question from Teresa in the Discord, because the RSI can be super confusing sometimes. It is the best indicator, in my opinion, like by far the best indicator. I'm using it. Yeah, it is the indicator I'm using the most for my trading. But it can be also in a bull market right here, in a bear market as well, can be quite confusing sometimes. So first of all, the momentum indicator, the RSI is a momentum indicator. So it's indicating, I will say it like this, it's indicating the invisible force, invisible power behind the price. It's showing us a little bit what is going on in the background. Like sometimes I compare it with a golf ball. You know, if you hit a golf ball, then the direction is the price, and the speed, the power behind the golf ball is the RSI. And the RSI is great for trend reversals, also great for trends in the RSI, but also great to check whether bullish or bearish momentum is boiling up in the background of the price. But it can also be misleading, and I'm going to show you exactly what is the misleading part, which is very interesting. So normally when the price is hitting a higher high and the RSI is doing the opposite, then we call that a bearish divergence, which means that in the background of the price is bearish momentum boiling up. But if we are in a bull market and the price just continues to rise, then at some point the RSI needs to come down. So we are seeing bearish divergences in the RSI, but this doesn't mean that we are going to see a trend reversal yet. So we, as you can see right here in the chart, we have like, we have like the price is moving up, but if you look at the white arrows, and the RSI is moving down. And in a bull market, this can be, although it is a bearish divergence, it can be a bullish sign, because it means that the price is actually consolidating while the momentum indicators, they are resetting. So they're coming back to neutral levels, and they are creating space to go back into that bullish momentum again. So I think the most important rule with the momentum indicator is that if you are seeing a bearish divergence, then that is a warning. The bearish divergence is a warning. That is like a alarm bell going off. And then next to it, it needs to break support. If it breaks support, then then that is going to that is telling us that once we are breaking support, there is force behind this breakout, because we are seeing this bearish divergence. Like right now in Bitcoin, we are seeing also a bearish divergence, actually a double one. If Bitcoin were to break an uptrending support, I would expect some increased selling pressure due to these divergences. However, Bitcoin can also break above, just continue this uptrend, continue parabolic, and we can read that off from the RSI, because the RSI has to break through the declining resistance as well. And right now it's just preparing for neutralizing again, decreasing while the price is going up. So that is a confusing thing, but I hope it is clear. I can understand if there are some questions about it, so please fire them up.
Yeah, because I'm the one that stuck the pattern in the thing. So when there is this kind of convergence in the RSI, like what we're seeing on the weekly chart, where we're not only seeing lower highs, but we're seeing higher lows, and it's a multi-week pattern, is that a pattern that you would pay attention to from a standpoint of actually trading that? Like if it breaks that upper support or that lower resistance in the RSI, does that mean something that we should be paying attention to as a trade signal? Because there's like almost like a wedge being developed on the long-term time frame, right?
Okay, yes. We are seeing a rising wedge pattern in Bitcoin, and we're seeing a bearish divergence on the weekly time frame, which actually, I have to say it, like, we are in a bull market, but it is actually quite concerning, because normally when we are seeing that, we are seeing heavy price corrections. And you often heard the phrase like, this time is different. Well, most of the time it isn't. This time is similar as previous times, So I think it's quite concerning what we are seeing with Bitcoin, and that we are seeing those bearish divergences. However, I don't want to assume that we are going to see a huge correction. I don't want to assume that, because we don't have that clear evidence. We just seeing like the red lights are blinking a little bit on the weekly time frame, like, watch out, something might happen. But we don't yet have that break of support, because Bitcoin is right now just riding the support and continue going to higher levels.
Jeroen, is there a time frame for when we see bearish divergences play out? So if it's on the weekly, do we have to look at the next weekly candle, or is it imminent compared to a bearish divergence on the daily?
Sorry, could you repeat the question one more time?
Is there a time frame from when we see the divergence to when it plays out in the market?
Oh yeah. Okay, that's a good that's a good question, because let me think about that one. I don't think there is necessarily a there is not necessarily a time frame. However, the bearish divergence or bullish divergence can be invalidated as well.
Right.
So we could actually have a maybe we should have a look at the chart. Maybe let's
that'd be good, because
let's have a look
which way
at
is
the chart.
Bitcoin gonna go?
Where's Bitcoin right now? Let's have a look. Now let's clean my chart a little bit right here. Remove the drawings. So yeah, for example, right here we have a nice bullish divergence on the 1 hour time frame. We set a lower low in the price, higher low in the RSI. And then you can see like afterwards, the price is not reacting directly. We consolidate for a couple of hours. And that's what I mean with the swing, you know, like we see this bullish divergence. This is actually a very powerful one, in my opinion, because we are in a bull market, a lot of momentum in Bitcoin. We have seen a correction right here from the top till the bottom of 14%, which is quite a drop. And yeah, combined with this bullish divergence is just showing like, okay, there's going to be a powerful bounce to the upside. But first of all, we consolidate a couple of hours. So we have like a 1 hour time frame bullish divergence. And yeah, we consolidate after the divergence is playing out. We consolidate, let's say 5-6 hours before we seeing that power being expressed in the price. If on the other hand, like the price would go sideways or maybe go down again, and right here the RSI would surpass the low right here, so then it's not a higher low anymore, then that would invalidate this bullish divergence and showing us that yeah, there might not be so much bullish momentum boiling up in the background.
Jeroen, do you mind flipping over to the weekly time frame? Just because I'd love a bit of an elaboration on the earlier question I asked.
Sure. Let's do it.
Okay. So if you look at this time frame, we've got higher lows going on for weeks now.
Yeah.
But that is like consistent with the price pattern, correct? Like, so that's not a divergence. It's just tracking the price pattern. But then over the last month, we've got the lower highs that is the divergence, right? So would you pay more attention to one of those support lines versus the other? Like, do you pay more attention to the divergence?
Like, let's go to a different.
Does that make sense how I phrased that question? Yeah. Okay.
Let me check if I understand it correctly. So right on the weekly time frame, we see this bearish divergence, you mean, like the lower high in the RSI,
yeah,
and the higher high in the price, right? And
correct. But you're also seeing almost a trend line in the higher lows. Like the higher lows are lining up. Do you get what I'm saying? So there's actually a trend line.
So we have like, you mean like this, we have a channel going on in the RSI.
Yeah, but if you go back to 2020, like June 2020, let's say. So just go back.
Yeah.
Yeah. Do you see that there's actually a trend line in the lows? Like the lows are actually creating a trend line.
You mean
on
a
the
support?
RSI. Yeah, a supporting trend line.
Right here.
Yeah. Do you
so
get
we
what
have
I'm
the
saying?
resistance. Yes. So that is something that is actually really good that you see that, because that's also very interesting with the RSI, because the RSI also functions as a chart which you can analyze with Fibonacci levels, but can also analyze with support and resistance, which is can actually be very, very powerful. Let me try if I can find a example for that. Let's go to the lower time frame, because sometimes, and this is really interesting, sometimes we can already know that the price is going to break out before we actually seeing the breakout. So let me draw right here. We have a declining resistance on the 1 hour RSI. Let's say like right here, we touch this level multiple times, 3 times, and right here we break out. If you look at the price chart, right here we break out. Yeah, right now it's coinciding like similar with the price breaking the horizontal resistance right here, which we have been testing on the 1 hour. So in this case, you can use the RSI as an extra confirmation. So we see the price breaking out above the resistance, RSI is breaking out above a resistance as well, showing us that momentum is going to shift to the upside. But sometimes we are seeing that breakout in the RSI earlier than in the price. So let's check if I can find an example for you guys. Let's go right here, and maybe this is something. Yeah, this is a good example, I think, or might be a good example. Like we have kind of a horizontal resistance right here, could also be a declining resistance, but let's keep it simple. Right here we break above the RSI, and that is right here. As you can see, we already break the resistance in the RSI, and it's for a couple of hours later that we actually break that horizontal resistance. So this can already be a signal showing us, yeah, okay, we are going to break above it.
Okay, can you continue this point further and go back to the weekly time frame? Because here's where my big question is on the weekly time frame. If you look at the RSI, because this is what I'm wondering about what you just said.
Yes.
Okay, if you look at the last 4 lows on the weekly time frame, okay, 3 of them are on a support line. So if you do 1, 2, 3, 4, 1, 2, and 3 create a support line in the RSI. 4 broke that support line. You get what I'm saying? Like, so does that mean that that is a bearish indicator we should be paying attention to, or is that just the RSI resetting itself because it was so high it needs to reset in a bull trend?
Oh, this you mean?
That.
Oh,
Yeah,
this one.
that's
yeah,
the
yeah,
one
yeah.
that's causing the biggest question in my brain, because we just broke a major support line in the RSI that's been going on since last summer.
Wow, yeah, actually,
and there's quite a few touch points on it, right?
Yeah. So this is something going into the basket of extra concerning, because yeah, you're right. This is something. This is definitely a concerning thing. So we don't know yet how this is going to play out. So this is you could see this as a momentum shift on the weekly time frame, but
Okay.
as long as we are not breaking any support, we don't have that evidence, that like smoking gun evidence that we are going to see it, So in this scenario, I would still, let's go to the daily time frame. I still want to see Bitcoin like breaking this uptrending support. Like this uptrending support, we first need to break before I actually can say with more certainty, okay, now we might see a reversal. I'm going to prepare for more room to the downside, right? But this is a very interesting found you actually have, Teresa, because I didn't even.
Well, not only that, but it just retested that trend line as resistance and bounced off it.
Exactly. So this is an extra confirmation that this former support is turning into resistance, and combined with this bearish divergence, because if you look a weekly bearish divergence, every time we have seen a weekly bearish divergence in the past, we had a major correction.
Okay.
Except for this time. So we can say again, like, this time is different, who knows, but I think the chances are actually quite increasing that we are going to see a correction. But even though we are aware of that, so this is very good. We are aware of it, we are seeing the signals, we are feeling the confidence, right? We can realize the scenario of a Bitcoin correction, right? We can see it more realistic right now. We still have to wait till Bitcoin is breaking a key support level with convincing amount of volume, which is the final check mark for a hedging in stablecoins, waiting to buy back in later or to open a short position.
As a rule of thumb, is it price action first, indicators second? Like price action dictates.
Yes, I think so. Yeah. I think so. Yeah.
So this is just something to pay attention to, but you wouldn't trade based on it. Like keep your eye on this. This could just be the RSI resetting itself to a more stable level in a dominant bull run, but we should watch what's going on here.
The thing is, you have to think like right now we don't know what Bitcoin is going to do, right? And if I now going to open a short position, just assuming that we are going to see a correction, but maybe we are going to see something like this. So we were just drawing the channel. Let me do it like this. A little bit sloppy, but we have the channel, we have the former support turning into resistance. What if right now I'm just opening a short, I'm hedging like 50% of my portfolio in US dollar stable coins because I'm convinced that we are going to see a correction, which signs are telling me? I have convincing signs that we are going to see a correction. What if the price is doing this? Something like this, and in the RSI is doing something like that, and in the price we are seeing a bounce off from the support. We are setting another high, maybe topping out, let's say $70,000, and we are creating eventually a double bearish divergence, right? A lower high and another lower high later on, but the price is creating another higher high. That is possible. This is a potential scenario. And of course, if I right now would open a short, then that would be the wrong decision in this case, because I'm not sure what is going to happen. I want to act when it's happening, but this is all already very important to have the how do you say, to have this scenario, to be prepared for this scenario, right? Because a lot of investors, they will just assume, oh yeah, Bitcoin is going to, it will not correct, it will just continue to go up, like just looking into one direction, which is very dangerous. Then if Bitcoin might break the uptrending support right here, they will think like, we just will see a small pullback and continue further down the road. We have reasons to believe that that might not be true. So we are going to prepare when Bitcoin is going to drop below the uptrending support, and we are seeing convincing amounts of volume. Then we are going to protect ourselves, like hedge in stable coins or open a short position, and for further on elaborate on what is going to happen with the price.
So this is basically a scenario where you wouldn't trade this, but you might be careful with your longs right now, given that this is showing up in the RSI.
Yes,
definitely. Is that more or less the mindset you would create around this? Okay.
Yeah.
That was super helpful discussion, Jeroen. Thank you.
If you have leveraged long positions, I would definitely consider like taking profits. Also because we have been setting a new lower high as well, right? Like you see the high we have set right now is lower than the previous all-time high. So yeah, at this moment there's not too much strength, like I would say, in the Bitcoin price. But yeah, we are still trading in this pattern. So that is a little bit the thing, like the thing is, what I see in my experience is that often I see these things, like, oh, okay, I think there's a high probability that we are going to see a correction, and then eventually I prepare for that too soon, and it's not playing out. We are seeing another scenario where we create a double bearish divergence. So you really want to be sure about what's happening in the price. And when we are seeing these alarming signals, then the last step, the last check mark we have to do is just break the support. You might have like less big of a profit, like if you open a short now right here, or you hedge your Bitcoin in US dollar right here, or right here when we break the support. It's not that big of a difference. But if we are seeing a further continuation to the upside, you miss out as well. So that's what I think. I think it's always better to really take the safer bet.
Thank you. That was a super helpful discussion. I just learned a ton. Thank you.
Sophie, sorry, I've seen you have a question.
Hi. Yeah, just a quick question about the RSI. I'm finding it tricky to work out where to put the lines. Like at the moment, I'm just looking at the 1 hour, but it could be the 4 hour as well. I'm not sure where I start the line, because sometimes like I'm looking at the 1 hour now, and then you've got a point actually from say, the 13th of March. So that's a higher high. But then if you come to the 15th of March, so what I'm struggling with is to realize where do you take the starting point? Do you understand what I mean?
Yeah,
because then it's
I think
like,
I understand. Yeah, like
it's like, is it coming down or am I starting? Is it going up?
Yes,
And look,
yes.
I've even look. Can you see this? Like I've even drawn this out, and I still can't work it out. It's
Okay,
crazy. I'm like looking at this sheet, like I don't know. Yeah, so that's what I'm struggling with. Is like, how do you know where to start the line to find out whether it's going down or is it going up?
So this, yeah, that is a good question. I think this is also something you have to learn to recognize. So you have to do this often. You have to, yeah. I think this is something you have to learn to recognize. It's the same as how you are connecting bottoms and tops, looking for support and resistances in the chart. So the RSI is often more choppy than the chart, going from top to bottom, overbought, oversold. So it's yeah, a little bit might be slightly more different to spot the support and resistances in the RSI, but basically you analyze them similar as you do the chart. So let me just do a couple of them. So right here we see a declining resistance. Let's see what it's doing that with the price. Let me check further. Like right here we have actually quite a clear uptrend right here. Then right here we have looks like a declining resistance where we have a nice breakout right there, which we see in the price as well. Then right now we are seeing a uptrending support forming as well, which we might be testing in the next hour. So this could be something like if we break the support of the RSI right here in the next couple of hours, then that could also be a extra indicator showing us, okay, we might see a bigger move, or the move to the downside right now carries a lot of momentum. So we have to be careful. But yeah, basically you analyze them similarly as you would analyze the chart. But it is looking more choppy. So it is also it is also I would never like trade solely based on the RSI. Should always like coincide with something in the chart, like we are hitting a resistance right here a couple of times, then we are seeing that as well in the RSI. So the momentum has problems to really grow, and the price also has problems. And once one of these two is breaking this problem, breaking this resistance, then that is confirming, strengthening the both cases, of strengthening that scenario that we are going to see a bigger breakout to the upside.
Okay,
so
thank you.
In the price action that we have right now, then taking all of that into consideration, do you see that what we've got is a breakout of the W confirming support? We're waiting to see if it's going to bounce off support and continue, or is that creating a bull flag as well? So what's going on?
What's going on? Yeah. Funny, like funny that you can say a bull flag, because I understand that this indeed could look like a bull flag, right? And then like a continuation pattern to the upside. I think I have some mixed feelings right here. We are testing, you're right. We are right now testing a horizontal formal resistance, which, if Bitcoin were to be bullish, should flip into support. Which is definitely possible, because we have seen an increase in the price of Bitcoin with increased amounts of volume, which generally is a bullish sign. But yeah, if we break below this level, I think we definitely can see a further drop in the price of Bitcoin. But yeah, this is the level that Bitcoin right now is testing at approximately 57,700. I think if I give a rough number, and if we would draw a fib level right here, so this is also something I would consider a bearish signal. Is we have seen a drop from breaking the previous all-time high. So wait, let me go back to the daily time frame to explain myself a little bit better. So right here, we could be forming a rising wedge pattern. And the moment we broke the previous all-time high in this rising wedge pattern right here, approximately 58,200, you see we saw a rally in the price, but we didn't came to the resistance. The price already reversed before the resistance, which normally is a bearish sign, showing us that right here there are sellers, which causing the price not to go to the resistance and be sold right there, but already sell beforehand. So this is something worrying. If we go to the 1 hour time frame, and then we have these bearish divergences, of course, as well. There's something to take in mind. Then right here, if we see the bounce so far, then we can see that the bounce came approximately slightly above the 61.80%, but it cannot hold this level. It's breaking back below it. It's backtesting this level as resistance, which is also a bearish sign, because that could mean that this bounce was a retracement from this drop. You know, so that eventually we are going to see a continuational drop right here to the downside. Might be testing this support one more time and coming down right here and seeing a nice bounce, and Bitcoin just continues in this bull trend. But I think we also have definitely reasons to believe, when we look at the weekly and daily time frame, that we might be seeing a breakout right here to the downside. So that is the moment to act, in my opinion. You know, the moment to act is the moment we break the support. If you're really convinced that we would break the support right here, then you could as well act earlier. So let's say we break the 50% Fibonacci level right here, then you could, for example, open already a short position, that when the price is traveling to the support right here, you're already in a short. So when we break, you have quite a strong entry, right? And if we would bounce, you could, for example, like close it at break even or close it slightly below. That is a way to play the scenario.
So where would you draw the Fibonacci lines to see where it could possibly retrace to? Do you start it at the top, at the bottom of
if we break out to the downside, you mean?
Yes, if it breaks to the downside, you take the Fibonacci's at the bottom of the last bottom.
So yeah, that would be in the worst case scenario. Like if we would see a real like big correction, and that is the levels we would draw. Let me zoom out for a second right here. Let's go to the daily time frame. So yeah, the thing is, we have seen a massive rally. So to draw right here from the bottom till the top, we could be doing that. And then we could see the golden ratio at 26,000 approximately. So I think right now, I think it is unlikely for Bitcoin, in the situation we are seeing right now, that can change in the future, of course. I think it is unlikely we will go to this level, especially in such a bull market. So if we would see the amount of correction we would have to see is a correction of 57%. I don't think that is likely. It's also it is something we have seen before in previous bull market. We have seen a real severe correction, but yeah, I don't think that that is the right way to check for potential targets to the downside. I think the right way right here is to check whether there is a lot of confluence between previous support and resistance levels. Yes.
Could you consider that a head and shoulders, or is it too tipped?
This one
to be considered a head and shoulders? Yeah.
Yeah, I personally would not consider that a head and shoulders pattern. No, but I understand the.
So, Sharon, just a basic question.
Because
so whenever you're using, oh, sorry, Teresa, I thought you'd finished. Sorry.
Sorry, I just want to confirm that that is strictly because the last high is higher than the middle high. Is that correct?
Yeah, I don't. No, that's not the reason. I think this, like, to consider this a head and shoulders pattern. I don't know. For me, it doesn't look like a like a clear head and shoulders pattern. I think it looks a little bit choppy to me. I think you could consider this you could like analyze it like that. That's also, like I said, that pattern trading can be subjective, right? So every trader sees a different pattern. So I didn't even like looked at this price action like a head and shoulders pattern, but from the normal head and shoulders that I'm seeing, I wouldn't consider this one of them.
Okay, thank you. Sorry, Manal.
That's all right. No. Just when you set the Fibonacci lines, are you always just setting it on the pattern where it starts? Because you can set it, as you can see, you know, from the bottom of a chart going across a year. But when you set one earlier, you just go to the bottom and you just use it for a particular pattern that you're looking to trade through?
Yeah, so it's depending on which time frame you're looking at, but you normally take the swing low and the swing high. So if we have a look right here, then we can see like this is the swing high, this is the swing low, this is the swing high. Right here we have another swing low, and right here so far we have the swing high. So what we do then, we take the swing high to the swing low, and the swing low to the swing high. So that is the way to to measure the Fibonacci levels. You always have to take the high of a certain move and the low of a certain move, and it can also be in the shorter term time frame. So if we go to the 1 hour time frame, so right here we have a low, a high. We can draw it, for example, as follow. Actually, I would prefer to take this low, because this is the swing low.
A week. Yeah.
So I would prefer.
Yeah, I was just wondering where you started. Okay, on that one.
And then another thing actually is very important when you are using these Fibonacci levels is try to find confluence. So right here, I've been drawing it from this low to this high. We can already see this line is respected. We have been rejected from this level multiple times. Here, the 78 is showing already support. You know, here we're seeing some confluence. So this is telling me that these levels are showing significant because they have been showing significance in the past, you know. So that is also a way to check whether a level is going to be important or not, to check if the previous price action has been respecting these Fib levels.
So again, drawing is always subjective, because when you're watching videos of other YouTubers,
yeah, I wouldn't necessarily
the amounts vary, because you can't rely on it completely, is what I was saying. You have to really do your own charting and then just go and see how it plays out, right? Pretty much.
The thing is, we have a swing high. This is like the all-time high, and this is the swing low. So the lowest low. So that is how we draw the Fibonacci. We take the swing high, we take the swing low, and there we have the 61.80%, which we broke to the downside, you know. So I think drawing Fibonacci levels is not really subjective. You can use it in multiple ways. So you can also use it. Let me check right here. So we take the low right here, and we take the high right here. So within this uptrend, and you can see we trace back to the 61.80%. So, but we still took the low and the high, and we measure the move from. We calculate the Fib levels from a certain low and a high. You know, so yeah. So I wouldn't do this really quick, for example, although it is showing significance, because right here we trace to the 50% if we would take this low and this high. But I personally wouldn't use it in this manner, because we're just taking a piece of price action in the middle of a move, right? But I think we can use it as follow, like taking only this move for a because we're taking the swing low to swing high in a shorter period, shorter time frame, you know. Is that clear?
Sorry, I'm gonna have to leave. I'm afraid I've got to go back to work, so I'll have to catch up with the rest with the recording. But yeah, thank you. Bye, everyone.
Bye, Sophie.
Bye.
Before we end, Jeroen, can you see if there, just have a look at the price action currently and see if there's a potential trade coming up for everybody?
Yeah, sure. So
I'm already in a trade that's gone south, so I'm just kind of white knuckling it to see if that's going to bounce or continue to go down.
Yes, yeah. So I'm thinking right now. I've looked today as well. Like I'm thinking right now, let me. So yeah, I see some confluence right here, which is quite interesting. I think we have some reasons to believe also the points that Teresa have been pointing out today, like we have some worrying signals going on in the longer term time frame, the daily chart, the weekly chart. We have definitely some worrying signals. We're forming a bearish pattern, rising wedge pattern, right? Which is also showing a potential bearish scenario. And yeah, right now price is not holding too strong. We have a declining resistance right here. We have a horizontal form resistance which should turn into support. This is the level Bitcoin is testing right now. If Bitcoin wants to remain bullish, we really need to see a bounce from this level. If we break below this level, then I expect at least Bitcoin coming down and testing the uptrending support of this rising wedge pattern. If we break below this, and then this is going to be the next obstacle for Bitcoin, whether it can see a bounce from this level. However, that chances decreases. So right here we had a nice chance of a huge bounce, because we had a nice bullish divergence. We came back to the support. Okay, the bounce can go as high as possible. But right now we are seeing the first signals of price slowing down. Bullish momentum is slowing down. Price is coming down, testing some support. So for the price to save itself, it needs to bounce from the levels right now. If we break below this level we are testing, I think at least we come down to the uptrending support right here. And that's because we are seeing confluence. We have a horizontal form of resistance and we have a declining resistance where the price right now is trading above. And if we break below, is again showing weakness in the price. And I think we at least will come down right here and test the uptrending support of the rising wedge pattern, which as well could be a potential turning point that we break out to the downside.
Jeroen, what would be the target of a trade if we took the short? How would we figure out the target?
Yeah, so let's
Or
go
how
to
would
the
we
daily
trade
time
that?
frame for that. I wouldn't set a pre-target. So if we break out to the downside, I wouldn't say like, okay, I'm going to take 100% of my trade out at this exact target. I would check how the price is reacting. So first of all, when we are breaking out to the downside, you want to see like a real reaction in the price. So increased amounts of volume, we want to see an aggressive move to the downside. If we are not seeing that aggressive move to the downside, then maybe the potential downside is limited. But I would take it level by level. So we have a horizontal support level right here, approximately at 55,000. That's going to be the first level Bitcoin is going to test after we break below the uptrending support. Then the next support level is going to be right here at approximately 50,000, slightly above that, 50,500. So I would personally take it per levels and see how Bitcoin is reacting. If Bitcoin is showing strength, might consider taking out the trade. If Bitcoin continues to show weakness, just leave it open. Depending as well if you're trading on the spot market or if you're trading on leverage. So leverage, I would earlier take the profits, and spot market, I would earlier say like, okay, I'm going to take a break and take some more time, see what the price is going to do. So this is how I would approach the pattern that the price action we are seeing right now.
Do you think we're going to go back into the 40s at any stage, or do you reckon that the 50s is where there's been so much resistance and support, especially between the 51 and the 52 price range, that we might find those as the lowest bounce back now?
So yeah, so normally like this orange line is the 20-week moving average. And if we have a healthy bull market, like right here, 216 to 17, then the price should never like really get below this level. And as you can see right here, we have seen some moments that the price like wicked below the level, but it should be a very short move, and like Bitcoin should be bought up real quickly. So this would be the ultimate bottom, in my opinion, if we were to see a correction. That level right now is at 35,000 approximately, but this is a dynamic thing. So every week, if the price would be coming down right here, this level will increase. So I think this would be a safe bet. Let's say the ultimate bottom of a Bitcoin correction in a healthy bull market, which is planning to continuing in an uptrend.
Okay.
If we see a weekly close below, then we might switch from a bull market into a bear market. I don't think that's going to be the case, to be honest.
Okay.
But yeah, I think this can be the ultimate low in a bull market.
Okay. I have to scooch. I'm late for my staff meeting, so I'll catch the recording and I'll see you in our interview. Thanks. Bye.
Awesome, Nicola. Good questions. Thank you for today.
Sorry, I can't raise the hand on here, but I have a quick question. I've seen some people using Excel charts when looking at order books and volumes and so on. Can you show us that?
Which charts?
Excel charts.
What are Excel charts?
So they have like order books under it's okay. I was hoping you might be able to.
Yeah, you mean the colors, like you have like these.
Yes.
Yeah, exactly. That's liquidity in the order books.
Yes.
Yeah, exactly. So, yeah, I have been looking at these charts now and then. I've been not yet using them too much in trading, but I think you can extract some potential information from it, which you can use for trading.
Yeah. But do you think I would be overcomplicating myself? Like
no. I think it's interesting. It's definitely interesting. So normally they say liquidity works like a magnet. So if we have like huge support somewhere, then it's a high chance the price eventually goes there, because it works like a magnet, same as resistance. You know, if there's a huge resistance, a lot of sell orders at a certain level, then it can work like a magnet. But I want to tell you this as well. I have seen some cases where these charts were being shared and there was like huge resistance at one level, and Bitcoin just blasted through it, didn't got any sell off, and just took off, you know. So yeah, don't rely on these charts. That's what I would say. It's maybe interesting to strengthen your potential scenario you're watching, you know, or levels that you are watching, if you see confluence, but it's not not too much significance, I would say.
No, I was just wanted to ask your opinion about that before, you know, getting into wasting my time with them. Because
Any more questions? I have one thing to share.
Awesome.
Before we wrap it up, guys, I've made a new thing. I put a new channel on in Discord. Like, let me show you. I think Discord is the easiest way to have communication about trading, because it's easy to open in your web browser. It's easy to share charts, like what Teresa was doing here. I've put here trades, so a new channel, trades, and I think maybe it's nice for everybody to share some trade setups right here, and we can give each other feedback, you know, talk a little bit about what one is seeing and why something could work out or should not work out, you know. Like I think it's also good for your own development to share your insights, share your ideas, and get a little bit mirrored sometimes, so get some feedback about that. So I think this could be nice, that everybody is before we are meeting next week, is sharing some of their ideas, trades in this channel.
do we still have some time?
Can you send us the link to that one so we sign up, Jeroen?
Yes, no, this is in the Profitable Bootcamp Discord.
Oh, it is.
And then
Okay.
like
Okay.
below input, there is another channel where you can.
Oh, I see. Sorry. Yeah,
Yes.
I'm not familiar with Discord. Thank you. I get it now. Sorry.
Oh, awesome. Are there any more questions?
Well, it's not per se a question, it's just the share that the trade I was sharing yesterday.
Yeah.
I entered into it and it went south, and I'm still into a small leverage position on the margin account. And I don't understand. Well, okay, I understand that probably I didn't do my homework correctly.
So where did you took the trade? Like what's your entry?
It's BAT Bitcoin.
And what is your entry?
22 something. It's just there on the line. It confirmed it, and then it went back. It's like 22 something, and then it just went back down. I think in the long run it should be okay. I hope, but it's just retesting that level many times, including overnight. So obviously I couldn't sleep that well.
So you have okay. So yeah, basic attention token is an altcoin. I already let's have a look. Yeah, so right now it looks like it's testing quite an important level, which is this level, which is approximately the level that you entered. So
yes,
as you can see right here, before in 2020, this was a very important support level. The moment we broke the support, we saw a further decline, and right now a basic attention token is testing this level. So yeah, it is.
That is the, I think it is the 50 also fib. Yes, and I entered just after.
Oh yeah, yes, that's right. That's the 50 fib. So there's a lot of confluence right here. However, it looks like it is possible that it's just gonna break through. I think it is possible, but it's too early to say, because we can also see a correction right here. I think right now there is no confirmation yet that we are seeing a breakout, but we are seeing a nice increase. We have nice increase in the amounts of volume. We can see in the RSI we break through a certain horizontal resistance as well. But I think this is going to be an important point. So when BET is breaking above this level, then that would be definitely bullish, but it's going to be it's quite a respected level, so to say. So it is possible that it's first going to get a correction as well. Looks like right now we don't yet see a confirmed breakout. We still have not a daily close above this level. I would say a daily close above this level would definitely would be more confident in upside move in BET.
I wanted to wait, but in the end I just got very excited. And
yeah, I think it's good. Like, for example, right here with these altcoins, if you go hunting for these altcoins, it is good to try to catch them slightly early in the phase. So right here, when we break above like previous high, and this level is like flipping support, for example, right here, that could be a nice moment. Like, okay, I'm going to accumulate some right here. If it goes down, I will just exit, but in anticipation of a further increase, because we could be seeing an altcoin season now, right? A lot of liquidity is going to altcoins. I'm going to buy right here when we are not yet seeing already a pump, because you entered right here after a pump of approximately after a 60% pump, which is a little bit like it's a little bit shaky. Normally you want to enter silently when there is no firework yet, but yeah, sometimes that's the thing. Like, sometimes you don't look at these charts, you start looking when there is firework. But yeah,
I went, actually what I did was I purchased, like I did a swing trade on spot market, and I purchased it, and I was seeing it performing very well against the USD. And then I checked the Bitcoin chart, just because my goal is to ultimately convert all the alts into Bitcoin and multiply them. So then I saw the potential, and according to my analysis, it should go much further than this. So I thought, you
you open the leverage, then you open the leverage trade on it.
Yeah,
sure. I know, I understand, like I understand it. Yeah, I would say like the best thing with these altcoins is to enter them like I said also in the Discord with Link in the Bitcoin comparative. Like I would say like enter them and at a time where there is not yet this takeoff, not yet the takeoff phase, you know, like we know, or like there's a high probability that these altcoins will do good in the Bitcoin comparative once we see altcoin season. But I think it's nice to slowly get into positions at nice accumulation levels, and don't open a position, or at least recognize that if you open a position after a 50% pump, that there is a increased risk to the downside, you know.
I keep on doing this. It's just when I look at the charts, just the same as the Link and the one that we are looking at now, the accumulation level, I just don't have the confidence that I need to enter into a trade. But when I see the bump, which is, it really goes against everything that you are teaching and everybody else and my common sense. But is just it gives me the confirmation. So I'm like, okay, well, if it did 50%, then it can do another 50%. And I know it's a gamble, but I just don't know how to work around it.
Yeah, okay, like here it becomes a reality. When you see the pump, it's becoming a reality. But what you want to do is you want to with altcoins trading, you want to anticipate. You want to anticipate for these pumps, because if you, like, let's say you get a nice wick and we backtest this level before we get a takeoff, then you would lose a 50%, you know, if you sell here, or depending what you're doing, but you are going to a situation where your trade is going to lose 50%, which is also doing something with you, right? So you want to get a good entry point. Your good entry point is not only important for the trade, but it's also important for yourself to feel good with a certain trade, you know, to be more confident in sitting in that certain trade.
Well, as I said, I did wait for it to be tested, and it was tested according to me, but I guess I should
So this
waited for a daily closing or maybe something like this.
Yeah, it looks like
shorter time frame actually.
Yeah, okay, right now look at the daily. I think it still looks like we can see right now this breakout, and BET can see a continuational move to the upside. I think it's definitely possible, because we are seeing nice increased amounts of volume with this pump. However, I would see like this level, the approximately 2200 level should turn support. So if we have a break above and we break below, I would say that would be a signal for me to get out, you know. But if this flips support, then that is bullish sign.
Okay.
But it is a very important level which is being tested right now. Yeah.
So was it wrong of me to look at shorter time frame?
The thing is, I'm not sure. I don't think wrong is the right word there, but like if you have like let's have a look. Let's do it for an example with another altcoin, just to have a look at the at what could happen. So let's take. You guys have you have any other altcoin you're looking at or not? Ethereum. No, let's take a smaller altcoin, like another big one. Ethereum.
Cardano.
Cardano, okay, ADA, BTC. Let's have a look. So yeah, this is an interesting one actually, which has seen a huge pump so far. So let's go to the 4-hour time frame. Let's get rid of the moving average. So right here, if you are interested in Cardano, for example, I would do the following. Like, I haven't been trading this, but I would be drawing a declining resistance right here. And as long as Cardano is trading below this resistance, I would say like, okay, I'm not going to accumulate it. And the moment we are going to break above this level, that is the moment, okay, now I'm going to open a position. Especially what I'm seeing right now as well is a bullish divergence in the RSI. So this was actually a very good opportunity. I've missed this one, which I'm completely fine with. You know, like, missing opportunities is not a bad thing. You cannot take every trade, but we had a nice correction from Cardano in the Bitcoin comparative. We had a correction of approximately 45%, which is kind of capitulation, right? Huge decrease in value. We have a clear declining resistance, like 4 touches minimum, right here on the 4-hour time frame. And then at the end of this level, so this could also be like a falling wedge pattern, right? Something like this. At the end of this pattern, we have a bullish divergence on the 4-hour time frame, combined with signs that we are seeing an altcoin season in the Bitcoin dominance and so on. So lower low, higher low, and we break the declining resistance, then this would for me be a buy signal. Like, and also a buy signal, I would like to bet like quite some some part of my portfolio with, you know, not like a very small trade, but I would be quite confident in this trade. That's the right word to say here.
The thing, because I put like 10% of my portfolio there at the level.
Mm-hmm. No, but like for example, like I really like these certain examples, because these examples is that the market conditions are almost all in the favor of the trader. You know, like, we have the capitulation, we have the bullish divergence, we break above the resistance. The only thing we don't have is like a real increase in volume. We have the level right here has been tested right here as well, so it makes sense to get a bounce from that. So like, this is like a really nice example of a quite a safe trade, you know.
Yeah.
And these conditions, what we are seeing with BET BTC, are slightly less. You don't have it is looking good, but it's not a perfect, or like, you know, a perfect market condition, what we are seeing.
I have as well Luna
BTC.
Yeah, I actually traded my BTC for altcoins in prep for the alt season.
Okay, so yeah, you did that. Maybe you did it on the right time. So Luna is looking interesting here. It looks like we are breaking right now. Yeah, I think Luna is looking interesting. I don't know, like, I want to say this, I don't know anything about this altcoin. I don't know the project. This is like most likely pure speculation.
No, it's a valid project.
Yeah, no, but it can. You say a legit project, or?
Yes, it's legit, and it's a very interesting project where on this protocol, stable coins can be mined for for that blockchain. So they are not USDT, but they are USD and so on. And there is also staking, and I don't know if you've seen in the news, Anchor protocol that was just released a couple of days ago. It's part of this project as well.
Okay, but
like, it's still very speculative compared with Bitcoin, of course.
It's a low market cap altcoin, right? So if we have a look at the chart, then we can see I think it's looking quite bullish. We break the resistance right now, and we have a hidden bullish divergence in the RSI. So I think Luna right there is looking actually quite good. Okay. In the short term time frame, yeah. But we already have seen a major increase since we took off. like approximately, what is it? Yeah, more than 1,000%. So yeah, it is looking bullish in the short-term time frame during alt season. I think this coin like this could continue to climb, but yeah, it is quite risky as well, because if this is going to correct sooner or later, we most likely going to see a quite a bloody correction, but can take some time until we are seeing that. But for short trades, I think this looking good. Right now we are in a breaking out to the upside. Looks like it wants to continue. Let's have a look at coin market cap at the how big of market cap this coin has. Terra Luna, this one, eh?
Yeah.
Yeah, it's a big market cap. So yeah, I think that's this one is looking interesting, honestly. Yeah.
Wow. Maybe I have more altcoins I can share.
Should we do one more and then we call it a day?
Sharon,
I actually have.
Oh, Whitney, you have a question?
Yeah, I was just wondering, I've been sitting with this one for a while and I'm trying to figure out if it's worth it to hold on to it or if it's a better idea to just get rid of it. XRP.
XRP. Okay, so we do XRP and let's afterwards call it a day. And Claudia, if you want to share other altcoins, do that in the trade channel on Discord, please. That would be great. But I think
it's
XRP.
actually the same situation. I'm sitting on it for a very long time, and I have a big position on it, and I think I'm
XRP.
No, it's YFI. I have.
Okay.
Yeah, but let's look at XRP.
Yeah,
because quite a few people that.
Yeah, wow. I think XRP is looking different. Like XRP has a little bit of weird behavior as an altcoin, because it's most of the time it's dead, and then suddenly in 1-2 days it's just like completely blowing off, right? And right now it's still at this dead phase. We had a fake out right here, which the momentum completely came to the upside. So yeah, good question. We have some declining resistance right here. We're still trading below it. We have a bullish divergence right here. The price tried to break out, couldn't break out. Yeah, so I would give it.
Would it be similar? Would it be similar on the USD chart? XRP USD.
Let me. I think we could be breaking out soon to the upside right here. It is definitely possible. I think it is interesting. Let's go to the USD chart. If I would hold XRP, I would wait. I would wait right now. Yeah, on the USD chart, it looks actually a bit choppy, but this is also a little bit the characteristics of XRP, because right here we can see it. It's just price is just a little bit indecisive, moving sideways. Not really clear patterns. It's actually quite weird. And then suddenly, when it's taking off, it's just like exploding in a short amount of time. And like couple of days later, couple of weeks later, all the gains completely evaporate, and the price even goes below the previous consolidation.
Yeah.
So
when it fell, that was when the SEC announcement happened, where that sharp fall is when the SEC came in.
Yes, that's true. I remember that, because I've been buying right here. I've been trading XRP in this move, actually till this move. And normally, like with the news, it's always eventually the thing is, the news normally doesn't regulate the price. So the news doesn't have control over the price. It's the other way around. The price behaves based on humans' emotions, and the news eventually follows. So so there can come any story, you know, CEO of Ripple died, or get an SEC report, or so. Like it's really strange, weird to say it, but the news is always unfolding, yeah, based on the price. But yeah, I think right here in the shorter term time frame, it's a little bit difficult to say. But if I would be holding XRP right now, we are looking at some form of a potential altcoin season, which means altcoins will be doing good. XRP has been a little bit dead over the past past weeks, maybe even past months. We are getting closer to a break of the resistance. So for me to trade this, if I would trade this, I would wait till XRP breaks above the resistance right here with increased amounts of volume. That would be my if I would trade this. But if I would hold it back, I would. I think at the moment I would wait till we are seeing a breakout. But next time, make sure to don't. I would say I wouldn't hold XRP. Not as something in my portfolio. I would trade it when I see a breakout and can profit from a very short time pump, you know, like a couple of week pump. I would trade it, but I wouldn't hold it.
Good to know. Thank you.
Awesome. You're welcome. So guys, what should we call it a day?
Yes.
Thank you. I will share the alt, and if you have the time to have a quick look, I would appreciate. It doesn't have much history, so.
Sorry, what did you say?
I just said that I will share the alt in the chat. So if you have the time, I would appreciate, because I have the same dilemma now. I've been holding on it for a long time, and I am ready to. I don't know what to do, basically.
Yeah.
Okay. Bye, everyone. Thank you, Sharon. See you next week.
Okay.
Bye.
Bye bye.